Good morning. Good morning. Good morning. My name is Jason Allen. I am a realtor and real estate planner based in Palm Springs, California. And it's Monday, November 27th, 2023. And I'm going to do a market update for Palm Desert, California. For those that don't know, Palm Desert is basically three towns to the southeast of Palm Springs. So I like to share my screen. This gives you a bigger version of what I'm looking at. And we're going to start on single family dwellings in Palm Desert. Unit sales are up a tick from a year ago. And you'll notice if we compare just to the previous month, we have an additional 8 sales. So a total of 48 sales this October. For those that follow this channel regularly, you might recall that a month ago, I talked about how pending sales had gone up. So it's natural that we're going to start seeing those close and see our actual unit sales increase a bit throughout the desert. Median sales price, again, median is the house in the middle. So half of the house is sold above that, half of the house is sold below that. Out of 48 houses, I'm not sure if it's the 21st house or the 22nd house or the 23rd house, but you get the idea. Inventory is down, not by a lot, but in as much as inventory is down, that's what's helping our prices remain stable. And I'll show you another chart that really demonstrates that. We do have houses sitting on the market for about 2 months, not unusual. There was a time pre-COVID when houses would typically be on the market 3, 4, 5, 6, 7, 8, 9, 10 months, especially at the high end. Sales to list price, almost the full asking price. And for these houses here at 97.8, these are homes that did not take a price reduction, whereas those that took at least one price reduction got almost the full sales price. So prices are not taking these huge dives. And this is the theme that I have repeated week after week. We do not see wholesale falling out of the bottom here. And in fact, some sales are actually going at or above asking price. And in this case, this is this number here, 22.9%, virtually 23% of these 48 homes. So almost a quarter of them, or a fifth at least, went at or above their asking price, which is why this number stays so high and why this number stays so high. We have about little over 3 months of supply. Again, what that means is if you took this number here of 193, divided it by 48, you'd come up to roughly 3 months of supply. So if no new inventory came on, it would take us 3 months to sell everything that's on the shelf. Median sales price down only slightly. If you look at this trend line, you actually see it going up at this point. Again, prices are not going off a cliff. 40% of the houses sold within 30 days, 67 within 60 days, 81% within 90 days. That leaves us 19% of the houses that haven't sold within 90 days. I'm going to flip over to condos. And condo unit sales 27. So here we are over here at 27, comparing that to a year ago over here at 40. Now, some of that is because as house prices remain stable and not like here we are at a median price of 465.5. We go to a house at 577 for basically an extra $100,000. You can get a house if that's what you want. Now, as I go through it, our inventory is up tiny amount. Days on market about 60. Again, our sales to list price for those homes that did not take a price reduction was at 98% of the asking price. And for those that did, 5%, 5% off the top. Now, that actually says to me that folks that are trying to sell a condo haven't gotten their head around the new market and adjust their price downward as they should. 33%. So actually a third of this 27, what would that be? Nine houses actually sold at the sales price or above it. We have 3 months supply. Median sales price per square foot is only down slightly. You can see here again, the trend line was very high in April, May, June of 22. It came back up to that in January of 23, and now we're down a bit. It's bouncing along, but you're not seeing 10, 30, 40, 50% price reductions. 44% of the homes sold within 30 days, 70% within 60 days, and 85% within 90 days. I'm going to jump over to another chart that I always like to show you. So this is houses in Palm Desert. Uh, this this slight seller's advantage gauge by Christian and Shauna Bailey, I find interesting. Um, that's really it's misleading in as much as it's a seller's market enabling sellers to ask a fair price for their home and have it sold. It's not a seller's market where the seller gets to dictate all of the terms. So if a buyer acknowledges price is not the only term and is willing to negotiate on other terms, which might be the inclusion of appliances or potted plants or furniture, if you're paying cash, or you have to negotiate that with respect to a loan, or if a buyer is willing to negotiate on terms such as the seller buying down interest rate points, or the seller vacating the property very quickly so that the buyer can move in. Uh, who the services are, repairs. Repairs are a big one. You begin to see that the buyer actually has a lot of leverage in this market. Why is that? Because we don't have two, three, four, five buyers for a given property. That really makes it a seller's market. This is looking strictly at price and inventory. All right, that was a lot there that I digressed on. If we go over here, again, I love showing this because if we're using the median price, which is the price right in the middle, you see the bottom three quartiles as just sort of bouncing along, no huge fall off. The high end you can see fell off dramatically, but is on the ascent. And that's feeding into their little gauge here as well. And then I pause here for a moment so that you can look at this bottom section. Here's what they define as the high end. You can see they are absorbing, they are getting purchased. It's not as if everything is sitting forever and ever. And then let me flip over to condos, run through the same thing. Again, it's reflecting a seller's market, but take into consideration everything I said with respect to houses. Down here now, interesting to me that we are seeing the higher end in condos recovering. And in the case of the bottom three quartiles again, they're just bouncing along. Are they a little bit lower than their high water mark in December of 22? Yes. Are they, you know, a, is it an inverse of this? No, absolutely not. So what's what's important to keep in mind, and I'm going to scroll down so you can pause and look at the bottom if you want. What's important to keep in mind is that as interest rates are high, it's keeping a lot of buyers out of the market. And what you as a buyer have to recognize is that the moment rates go down significantly, and they will, you're going to have more buyers in the market. Once there are more buyers in the market, you as the buyer don't have as much leverage to negotiate things, price, other terms, vacating date, escrow length, vendors. You lose your ability to sort of govern that aspect of the sale. And I will tell you, there are value propositions in the market right now that kind of blow my mind. And depending on what your price point is, whether it's in Palm Desert, Cathedral City, Rancho Mirage, Palm Springs, Desert Hot Springs, Indian Wells, you name it, there are these amazing value propositions. What buyers tend to do is just look at the sticker and say, well, if it's 800,000, I'm only going to pay 7, or I'm only going to pay 750, ignoring the value. That's a retail mentality that simply doesn't make sense. Think about if you're someone that goes to estate sales and you walk into this pristine home and everything they have is designer. And you go, I don't know women's clothing, but if you go into the woman's closet and she's got the right size gown and it's Christian Dior or Vera Wang and they want $50 for it, it's like, I'm assuming you're going to buy it if you like it. You wouldn't go take that dress off the shelf and go up to the clerk and say, I'll give you $20 for it. You might if it's the last day and the last hour and they have nowhere to put it. But that's not the market we're in. This is not 2010. There are houses and condos that have so much value. It might be a paid for solar package. It might be a premium view. It might be an outstanding location, but they want market rate for it. That is a tremendous value. And I, I, I don't know how to convey that to a buyer who stays on the fence thinking that they want to pay X off the sticker price. Homes, condos, land, property, not a commodity. No two are identical. No two. No two based on the maintenance of the property, the location, the specific ingredients or components to it. Speak wherever you are listening to this in the United States. Hire a professional if you are trying to buy a home. And if you're not local and you need someone somewhere, I'm happy to refer you to someone. And if you're a seller, recognize you have to make your representative has to demonstrate the value proposition in the marketplace. Very few buyers are walking in the door, but your representative has to demonstrate to them why your property is worth what it's worth. That's all I got today. Have a fantastic week as we roll rapidly towards Christmas and New Year's and the new year. See ya.